can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Hey, good morning, everybody. Welcome to the morning show. This is Stock Market TV. Spencer, JC, Steve, Alfonso. What do we got today? It is Wednesday, March 27th. Oh my gosh. Q1 is almost over. Crazy. What do we got? We got David Lundgren on the show today at 9. Very excited for that. We got Mary coming on at 9:30 mornings with Mary. See what part of All-Star Charts research she's watching and what she's been trading. What's on my mind here? Robinhood. I know JC's watching some divergences in the market. GameStop had earnings last night. I don't know if you want to talk about that, maybe. Let's see what's on the chat's mind. Good morning, everyone. Good morning, Dawson. Good morning, Jason, Phil, Mary, Chris. What's up? How are we doing? All right, I got JC here. I got Steve here. So let's get this show on the road. Come on now.
Oh, look at Mr. Strazza. I'm getting text messages from Strazza last night, getting text messages from Strazza this morning. I'm getting a lot of Strazza these days.
Every morning. You get me every morning.
This is going to be the Strazza show. JC's dipping out early. I had a special request from a little princess. A little princess asked if Daddy could take her to the Waffle House today since there was no school. So Daddy's taking the little princess to the Waffle House. Because it's right when you get on the highway. So she's driven by it 1,000 times, but her mother refuses to take her because my wife says that you walk out of there smelling like greasy bacon, which I don't mind smelling like greasy bacon, but my wife apparently does. So the little princess asked for a request for Daddy to take her. So that's going to be, that's why I'm dipping out early.
So Waffle House, that's some real Florida man stuff. I guess some things never change.
That's true.
Listen, it's right when you get on the highway. So like she's driven by it 1,000 times and she's always wondered, why don't we ever go there? And it's because mommy doesn't want to smell like bacon, but Daddy doesn't mind. Right?
All right. That's awesome. We don't mind when you have to dip out early.
No, David Lundgren's here. He's fantastic. You guys can have a great conversation. I'll watch it after the fact. But you know, got to take advantage. The little princess, you know, when she makes a request,
got to do it.
Steve, JC was not aware of the Waffle House Index. Do you know what that is?
I've heard of this.
You have?
No, fantastic. By the way,
it's a weather indicator. It really tells you. It tells you how bad the hurricane is. Right?
Right.
Yeah.
So you watch for Waffle House closures because if they're closing the Waffle House, you better get the hell out of there.
They don't close. Yeah. Right.
Yeah. Exactly. Yeah.
Yep.
Cool, man.
All right. Let's hit the markets.
Let's do it.
All right, let's do a quick little rundown. Dow futures up 150 points this morning. S&P futures up 20 handles. That's about 1/3%. NASDAQ futures up 40 basis points, 76 points on NASDAQ futures. Up across the board this morning. 30-year bond futures hanging in there. All eyes on bonds. Very, very interested there. Gold futures, 2,200 on gold, up 40 basis points. Silver flat, hanging around near $24.60. Copper futures back under 4, just under 4, down 60 bips this morning. Crude oil hanging in there, $81, down 60 basis points this morning. Dollar mixed in early trading, up against the euro, down against the yen. Volatility index back down to 13. And the U.S. 10-year yield 4.222 on the U.S. 10-year yield as bond futures slightly higher this morning. Big action across the board. I mean, just look at the Joe Biden making new all-time highs this morning. Man, these things are moving. So you've got, and then you've got the Trump one is moving as well. It's kind of in the same category. Bitcoin back above 70,000, up 225 points. Ethereum down 7%, down 7 points this morning, excuse me. About 20 basis points. That's around 3,600. And then, of course, if you want to finish up with a little Solana there, Spencer, 186 on the Solana, down 2%. Total crypto market cap, 2.56 trillion. What stands out, Strazza?
Are meme coins considered altcoins or like shit coins?
I don't know what the exact definition of a shitcoin is. I remember in prior cycles we had a shitcoin index, and that wasn't one that we invented. I think that was an FTX thing. But I don't remember what the requirements were to be considered a shitcoin. Now, is it an altcoin? Anything outside of Bitcoin? The answer is yes. But meme coins do have their own category.
Does Louis have a meme coin index yet?
There's just not enough of them. Like enough of them. Nah, like enough of them with real volume. I mean, listen, you can add like I have a meme coin. I've sort of have a meme coin watch list, right? So there's meme USD, there's the Geo Bowden. I added the Trump. The Trump is up almost 20% pre-market. We added Reddit. I added Reddit to the list just because Spencer brought it up, and I thought that was an interesting ad. You got the Doge, you got the GameStop, you got the Shiba Inu, you got the Book of Memes, you got the Dog with Hat, you got the Bonk, Floki, and Mog. That's my list.
Take a screenshot of that list, send it to me.
All right, I will.
Yeah, Reddit.
The Floki is a big one.
Yeah. And Flow is good too. Not just
so all right, so based on the morning rundown, memes aside, publicly traded stocks, so you can include the Trumpster. Anything there that stands out?
I think there's like a meme stock thing going on also.
That's right.
So Spencer's going to share GameStop earnings with us in a second. I don't think they were good, but
stock crushed. But I don't think that thing moves on earnings. Call me crazy.
No, it doesn't. It doesn't matter. And then we have the Reddit IPO, which has been a success in its first 4 trading days or 3 trading days.
Yeah.
And then we have the Trumper, the DWAC, which is now the Dow Jones Transportation Average.
Throw up slide 2.
So these things are all kind of working. And we were just talking about short squeezes, right, the other day. Trades like Carvana are working, and Rocket Mortgage and UWMC, and these heavily shorted names, they're squeezing. This is just a market that we continue to see investors embrace risk in, right? Or move further and further out on the risk spectrum, which is a hallmark characteristic of a bull market.
So Strazza, here's a good one. This is something we bring up all the time. Stocks where there's like this like inherent negative bias towards it. We've talked about Palantir, Tesla before. What else? Disney. Disney was too woke there for a minute. Stock just ripped 50% in their faces. So like this inherent like negative bias, you and I love it because it's kind of like a built-in short squeeze catalyst. I think this is certainly that. You have a portion of the country that despises this man, and nothing pisses them off more than him making so much money and the whole community making so much money, right? Like that really bothers people. It reminds me a lot of 2017. I was living in California at the time, in Northern California, in the Bay Area. So you can only imagine how angry people were. Everybody's going to cash. If you recall how aggressively we were buying stocks in the fourth quarter of 2016, that was a great time to be buying stocks. All my neighbors around California were jumping off buildings like the world's coming to an end. They're going to cash at the exact wrong time. And because those people allowed their political beliefs to get in their way of their portfolio decision-making, they missed one of the greatest years in the history of the stock market, right? Right after Trump got elected.
This is one of the worst and saddest mistakes an investor could make, is to let any of these things cloud your opinion on the market. But I don't think that these, like what you're saying about DJT now, is no different from what we'll say about oil and gas stocks when we're buying them and they're in an uptrend. Coal stocks, we used to say it about uranium. All things equal, something's in an uptrend, looks good, all things equal. Do you want the one with negative sentiment or positive sentiment? Do you want the one that nobody wants or the one that everybody wants?
All day.
That's what this is.
There's no question. There's no doubt about it. And so with that being said, like, why are we bringing this up? Why does this matter? Because we know that humans are going to fall, where they're going to make these mistakes. It's just human nature, right? We know they're going to make their mistakes. And because we know they're going to make these mistakes, we can profit from that. We could take advantage of the mistakes that we know that they're going to make. Humans, very, emotional beings that are very upset about things that have usually nothing to do with them. They can't help themselves. And I have friends that are like this too, that have just been like buying gold and silver and not stocks because, they don't like who the president is, right? Like I know people like this. It's up to us as investors to take advantage of their vulnerabilities. I think this is one of those situations. By the way, it works both ways on both sides of the aisle. When we were buying Disney, it was because the Republicans were upset about it. In this case, it's the Democrats that are upset about it, right? So it's not like it's just one group, right? They're both at extremes. They're both incredibly vulnerable to this sort of bad behavior, right?
And it's wild that people express their political beliefs in and on markets, but they do. And this isn't even just a phenomenon that happens for retail investors, but you'll see hedge fund managers get political.
Yep.
People can't help themselves. It's crazy.
They can't help themselves. Yep.
I'll never forget Carl Icahn after the election. Remember that?
Okay. I don't remember. What did he do?
He left the party early to go buy a bunch of stocks.
Did he?
He was at right? Wasn't that Icahn?
Why? Because futures were getting killed in 2016 after Trump got elected?
He said he's like, yeah, I left the party early. Get super long.
Good for him, man. Good for him. I didn't. I had a few too many that night because I was up all night and I was living in California in the middle of wine country. So I had too much wine and I have like a rule that you don't trade drunk. So I actually didn't buy futures, but I thought about it like, man, should I go upstairs and put on a few trades? I didn't. That's a true story.
There are only 2 nights in my life where I stayed up, past midnight looking at the futures, and it was Brexit and the night of the 2016 election because it was just so interesting.
Brexit was pretty wild.
Brexit was wild, man.
Was it?
And they both happened close together, right? But I think they were both in 2016. But yeah, 2 wild nights. Anyway, on the topic of memes, does it feel like we're definitely having we're in a moment right now, right?
Yeah, meme
coins, for meme stocks. Robinhood's in the news today. Robinhood is tied together to all this somehow.
It's meme season, no doubt. There's no question. You got the Geo Bowden making new highs every day. You got the Pepe coin at $3 billion in market capitalization. You got the Trumpster. I mean, this is a meme for all intents and purposes. It might be a publicly traded meme on a centralized exchange, but let's not mistake this for what it is. This is 100% a meme. This is a community that willed this into being, a community of like-minded individuals with similar cultural beliefs willing this into existence, and very successfully, I might add, like some other memes.
Incredible.
Yeah.
So the way to play it, is by playing it, right? That's it.
Yeah.
Sure.
Lesson: don't let your political beliefs get in the way of your portfolio decisions. Now, realistically, I think we probably get back up to 100, right? Get back up to 100. And then let's see what happens after that, right? That was those were the spring highs from early 22. I think that's where we go, and then we'll see what happens after that. But not for nothing, I feel like we're going to be talking about this because this is, even though there's resistance at 100 and change, like this is a serious base, and it's meme season.
Can we talk about what Robinhood did,
please? Because I actually don't.
Yeah,
they're issuing gold cards to people. So every time this man comes on and does an interview on TV, I want to own his stock less and less. I don't know why they let him talk.
Which man?
Vlad Tenev.
Vlad Tenev.
Oh yeah.
I don't know why they still let him talk. It's really terrible. Also, what is this? A card? Why are they doing this?
They're getting, plain and simple, they're getting into the credit card game, right? Just like any other financial services company. It's only available to the Robinhood Gold members, but it gets you 3% cash back across the board, up to 5% cash back on certain rewards, as credit cards are want to do, right? On 5% on travel, 3% on everything. It's nothing groundbreaking. It's a credit card, right?
I liked he was talking about the IRA offerings also. Was this in the press release? So it sounds like they have these fintechs offer the most competitive interest rates of like anybody in the financial services world, right? Just because of the way that they're built. Now he's talking about their IRAs are going to have like a better match than anybody. They're actually matching contributions as if like they're an employer.
Yeah, I know they were doing that. I think it was like I think it was a 1%, something like that. It was just as incentive to get people to move over there.
But matches are great. That's pretty cool.
Yeah, sure.
These fintech companies, they have higher margins and a less burdensome cost structure. They can do stuff like that, which traditional banks really can't anymore.
Here's my thing on this. I was talking about this with Fonz earlier before we hopped on. I would feel a little embarrassed if I was at a register somewhere and I whipped out a Robinhood credit card. I don't know why I would. I think this is a perfectly reasonable thing for them to do.
You're not wrong. Yeah, that's
like it would be. It feels like Robinhood is like the kiddie pool, and I don't know if that's fair to say, but that's how it feels to me. Okay, maybe it's because their average account size is very small. And I just forever associate them with like the meme stock, GameStop, AMC thing from a few years ago. But like, I don't know if I would.
Yeah, that's right.
You know what I mean?
I do, and I agree with you, JC. Right, and this is a problem because this is you're talking about their brand value.
Yeah, like if I was at dinner with friends and I whipped out a Robinhood credit card, I would feel insecure.
I don't know.
You know, and maybe that's wrong to think, but that's my perception of the brand.
Do you have an account, JC?
Do I have a Robinhood account?
Insecure.
Of course I have a Robinhood account. Who doesn't have a Robinhood account?
I mean,
I don't.
You've never had a Robinhood account?
No, actually, that's not true. I do have one. I never funded it. Yeah, but I do have one.
They gave me a free share of like Chesapeake Energy before it went to zero.
You guys got to play with the toys. I'm telling you guys. You guys make fun of me because, you know, my meme coin trading and my real estate in the metaverse and, you know, my AI toy that I bought. By the way, there's a pickup party in the city next month. I think I'm going to go. You got to play with the toys. Like, even if you don't, like, even if you fund it with $100 or whatever, a few $100 or $50 or whatever, like, I mean, it's not a new toy anymore, but it was at one point. Like, you got to play with the toys, guys.
All right. So I'll open a Robinhood IRA and let you guys know how it goes.
Yeah, whatever. Like, it doesn't even matter. Like, but you got to play with the toys. It's something I learned from, you know, smart people that I'm friends with, successful investors. You got to play with the toys. You got to play with the new technologies. You know, people are like, oh, you know, this crypto's a scam. It's like, well, have you even attempted to try some of these DeFi protocols, or do you just get very confused and it makes you angry, so you hope it just goes away?
Yeah, I'm not into it.
I remember you could ask David Lundgren about this. He'll tell you. Years ago, David Lundgren was asking me about this stuff, and he was like, you know, JC, I'm just not into it. And I was like, have you even participated at all? And Dave was like, you know, I haven't. And you know, I think he went on and he started kind of playing around. Ask David Lundgren about this when you guys chat.
All right, we will. But my point is that Robinhood feels like it's a great entryway. It's a fantastic entryway. It's a great on-ramp into investing in crypto, whatever. And that's all it feels like to me. It's the on-ramp. It's not the highway. You get started via Robinhood, and then eventually you go to the grown-up pool, and you go to like a big boy. You go to a big boy brokerage.
Fine, but we know that now. Years ago, when they first started and had new technology and everybody was stuck at home and everything like that, those were toys that were helpful to play with. And it really was I haven't used it in a million years, but at the time it was a really clean UI, like really clean, dumb, like stupid simple, and I appreciated that about it.
These guys are really good technologists. I think they're not the best operators.
And we knew that.
The bigger point is, and why wouldn't this one work? Things like Coinbase are working. Every brokerage in the world is working. People are trading more. Crypto's in a bull market. Like, of course, this one's going to work. Maybe it doesn't work as well as its peers. But the bigger point is, if you just throw up the chart and then we could stop talking about Robinhood. Couple people in the chat already mentioned this. This is the same pattern that we've been buying since last year, right? So really can't hate this one too much. Above the VWAP from its IPO highs, very clean base, got the breakout $5-6 ago, and it just keeps running. So up what, 6% pre-market now again today. I don't like the way that they're always dropping press releases and pumping their stock. What's next?
Yeah, that's it. Okay, what's next?
Can we talk about how fun meme season is? Right, it's fun.
It's not fun for GameStop this morning, but it's normally.
No, but what
fun.
I'm saying is, like I think people take themselves too seriously, and people who take themselves too seriously have a harder time understanding, culture and understanding communities. I think it's a nice reminder for people to, maybe have some fun, maybe have a little fun. Right?
Oh, I thought GameStop was up pre-market. Oops.
Nope. Opposite.
What else do we have? Earnings.
Hedge fund. It's a hedge fund now. Where are you asking this question? So I guess the hedge fund sucks, huh? It's down 16% pre-market.
Well, it should be good because this guy's a meme stock trader.
Well, clearly he's in the wrong memes. Anybody listen to the conference call? Don't you? Isn't that what you guys do for fun?
No, not this one.
Not this one. All right.
So what a waste of time that would be. You just said it doesn't trade on fundamentals or earnings. Not that really anything does perfectly, but some stocks more than others. This one, listen to it. GameStop earnings call. What kind of sicko do you think I am?
On that note,
I think you're a pretty big sicko.
They haven't had a call. I tried looking for it. They haven't had a call in over a year, like an earnings call. I mean, they had like an annual call for the annual meeting, but they haven't had an earnings call. It's been a while. They don't do the calls. They just drop a press release and say, "See ya."
Companies like that can't take questions.
Right. That's exactly.
People were complaining about that with B. Riley. Did you know also the moderator on an earnings call could completely ignore you? Right? Like if you're a big short seller and you're in there in the Q&A, they'll just see you and not take your question.
I can we do an early hot corner, because I want to talk about some of these media companies. As crappy as they are, we keep seeing huge buys coming into these media companies. No,
I don't know
why.
I want to talk about Warner Brothers. I want to talk about Fox. Can we
really?
do that?
Okay.
All right. I was actually looking at Paramount yesterday, ironically, but yeah, let's.
Yeah.
So hot right now.
All right. Stephen Cohen, owner of your New York Metropolitans, stepping in. This is the original filing, so it's a 13G. Oh, that's no fun. Why the G and not the D, Strazza?
They're never active. Never.
No? Are you sure?
No, dude. They want no news at that shop. No news.
Fair enough. All right.
This was probably a mistake too. They tried their best to completely avoid this. They got 100 different teams, right, that are managing money, and it happens from time to time. Oops, the total fund went over 5%. Right, we all bought the same thing.
Got it.
They try. They don't want to be concentrated. They don't. Again, no news. They don't want to move things. They don't want to file things. So this is cool.
Why do you think they're buying Fox?
Dude, but here's the problem. They are one of those companies.
Are they buying everything?
They're long, short. They're super tactical.
Yeah.
They're going to be in. They're going to be out. Probably pretty quickly. Not always, but who knows? This isn't Icon or Warren Buffett or Baker Bros establishing a large position that they're going to hold for quarters or in many cases years. Very different. So we don't pay too much attention to these.
How is this any different? How's this any different than News Corp? What's the difference?
They all own each other. It's a mess.
I used to know the difference. News Corp, I think, I don't know. I mean, it's the assets that they own, right? News Corp is the Wall Street Journal, Dow Jones, all that stuff. Fox is now it's just Fox News, and it's the cable. It's the cable company. News Corp is on a cable company.
News Corp owns Barron's, Wall Street Journal.
Right. Fox is the cable company.
The Post.
Right.
So I just have some companies that like I never want to own, like tobacco, telecom.
Why do you not want to own tobacco? Tell me why.
Just zoom out on the chart. They're terrible. Terrible.
It has nothing to do with tobacco. It's the downtrends you don't like.
They're terrible. They're targeted. No, it's the regulatory environment. Same thing I always complain about energy. Why own one that the government and the regulators hate and don't want to exist? There's just easier things you could do. But these media companies and these streaming businesses, same thing. And you're right, JC. The charts reflect it. Just really bad for a really long time. I don't understand.
Slide 3, just to Strazza's point.
Terrible. There used to be an ETF, PB. Yeah, Paramount looks bad too. There's a dynamic media ETF. They might have delisted it.
How does all this end? How do all these terrible media companies? And is this because like the advertising on like on television and stuff like that is just a disaster, and there's just better ways? Is that why?
Well, it's a two front war. It's advertising shifting online, and it's the cord cutting and people not paying for cable, and that's actually their main revenue stream is cable subscriptions. So the end game is what you're seeing with Paramount. The end game is that somebody eventually comes around and takes it private, which is going to happen here one of these months, right? There's been enough smoke there. So
is the idea for Nelson Peltz to take over Disney and spin off ESPN?
I don't actually know what he wants to do,
because they're not saying, but can't we assume that much?
Well, spinning off ESPN, that's so 2017. I mean,
it's still a good idea. Just because they never did it.
Maybe. I don't know.
If you have a high margin business and a low margin business and you put them together, you have a medium margin company. Why not spin off the low margin business?
It's just cable is not a good business anymore. It was for 35 years, right?
It was a great business for a long time, right?
Yeah, it's a great business. It's not anymore. That's just the reality. So,
all right.
That darn internet.
No, but it's really it's a fascinating situation, you know. Like it's kind of like a major dynamic shift that we're like witnessing, you know. It's cool.
Underway. Yeah,
it's cool.
All right. What do you? Any closing thoughts, JC, before you leave us for some waffles?
You know, I just want to reiterate: have some fun. Play with the toys.
Yeah.
You know, don't let your politics get in the way of your investing. That's always a bad idea. You know, worry about yourself, especially when it comes to investing, and have fun. You know,
I like it.
If you're doing something that feels a little silly, that's okay. You don't have to take yourself so seriously. Like, how many people do we talk to that are just take themselves so seriously? It's like, bro, lighten up, you know? So anyway, cheers, guys. Adios. Say what's up to David.
Later, JC.
I was telling Fonz this morning, Steve, that every day I get a little bit closer to actually getting off my lazy butt and opening up a MetaMask wallet and YOLOing shitcoins. You know, every day I can feel myself inching closer to that line, and it scares me because gambling is really fun.
So wait. You're this close to doing what form of gambling specifically?
Shitcoin gambling.
Right.
Right. I don't know how close I am, but I'm definitely trending towards the line. Right.
So you and me are going to be some really good data. When that
tell me when. Fine. I'll tell you guys when I do it. That's fine.
Right. So I've been saying the same thing, right? When I go and venture out to whatever these platforms are called and figure out how to do all these transfers and swaps and buy a Solana meme coin like the Bonk or whatever, we're late innings, really, really late innings. So we have to be mindful of that and remember to catch ourselves when that happens, right?
I don't know. Yeah, maybe you're right. Maybe I'm the signal. Maybe I'm not the signal. Don't know. Right?
I've been avoiding it, and I think for me, it's simple. I'm a beta guy, which everybody should be in a bull market, but there's just plenty of it on Coinbase, right? You don't have to be a crazy person. Every day I open up my Coinbase watch list. I have a Binance one too, because it shows me all of my available options, right? So that's really the universe that I'm concerned with. We have different universes defined by market cap and all that. for our research, but I want to know what I can buy and how those things look every day, dude. Up 40%, 30%, 50%, something. So why do I need to go do the swap and the pancakes?
Also, why should I YOLO shitcoins if I can just YOLO meme stocks? Right? Right? And I can do that right now, and I have in the past. So what, you know?
And I'm the first to tell you, like, you could buy a dumpy stock for a trade, right? But some of these meme coins, the way that they are just
that's the answer.
Honest about their lack of utility.
Well, that's the answer, and also a meme stock is not going to go up 1,000% in an hour.
If I lose a bunch of money, say fine, but Avalanche or Algo or some of these others might, right? Here's the thing: if I lose 50%, trading, I don't fucking know. What could I lose 50%? Oil and gas stocks. I'll feel a lot better about my loss than if I lose 50% trading a meme stock or a meme coin that everybody knows is fake and has no utility at all and trades on some sketchy platform or exchange.
Maybe, yeah, you're right. Maybe I just need to scratch that itch. I'm going to Atlantic City in 2 weeks for a festival, so maybe I'll just scratch the itch while I'm there, get the gambling out and then I can come back and be a normal, responsible adult, right? But
why don't you just put a big old wager on Yukon Huskies?
Yeah, right.
Scratch your itch that way.
Yeah, I know. I should. All right, we're gonna have David Lundgren. He's gonna hop in just a second. And then he sent over some charts, which is very nice to him. We always appreciate when our guests send charts. By the way, on the topic of guests, I've had a few people do this over the course of the last few months. But if you have any suggestions, anyone you want to hear on the show, drop their name in the chat. You can always DM me or DM us on Twitter, or you can email us at questions@stockmarketmedia.com. I'm always interested to hear who you want us to talk to.
Are you getting tired of all of our just same old guest friends?
No, I make a point. I do try pretty hard to try to get at least one new guest per week, or at least someone that hasn't been on for a while. Tomorrow we have Louise Yamada on the show. She hasn't been on since like June. Next week we have 3 new guests on the show. So very exciting. But yeah, no, it would not Warren Buffett. These are some good names, actually. I know a couple of these people.
We can make
Brian Shannon was just on the show. Brian's actually going to be featured on our new podcast that Steve's doing with Sean, Off the Charts. That's going to hopefully go live the next couple of weeks here. So it's very exciting for that.
I'm about to ask David Lundgren to be our next guest on it.
Oh, you should.
Yeah.
Wait a minute. Why is Shawnee here? Just cause? Sean, why'd you hop in here?
I told Sean to come co-host. He's playing hard to get.
All right. Well, while I wait for Lundgren to come back because his camera wasn't working, you want me to bring Sean on?
Sean's using his hotspot. He's not confident that it'll work, but you could try.
I don't know. I'm just going to bring him on right now. I hope he's ready. Hey, Sean.
Hey, guys. Yeah, we can try this. I can't promise that this is going to be a good internet feed. My town, we had a snowstorm this week or over the weekend, and it messed up one of the internet transformers here in town, and they've been fixing it for the last 2 days, so it's been going in and out. And right now, I'm on my hotspot, so we'll see.
I mean, it's working pretty damn good.
It's just 2 days in a row this has happened to you.
Yeah, well, they fixed it yesterday in the middle of the day, but it was a temporary fix, and they had to overnight some part in, and it came in overnight last night, and so now they're fixing it for good this morning. These are the joys of living in a small town, ladies and gentlemen. I live in a town of 2,000 residents, so sometimes the internet gets a little wonky.
Also, you live in the mountains.
And I live in the mountains, yes. But hey, shout out T-Mobile. How great is this hotspot right now? Working pretty well.
I'm shocked. I wouldn't think you could use a hotspot on here.
Yeah, pretty nice. So what's going on? Right. What's JC doing?
He's going to Waffle House.
Yeah.
Hey, when you're the boss, sometimes you go for waffles. That's good. Good stuff.
I think it's important to eat waffles or pancakes probably once a week.
There's a Waffle House. There's only like one Waffle House near me, and I actually drove past it this weekend. And I really wanted to stop, but my wife, she'd have none of it.
Waffles make you feel good.
They really do feel good, especially when you've been spending all afternoon couch shopping. And I don't know if you guys have bought a couch anytime recently, but my wife makes me sit on 1,064 couches before we choose one couch. It's crazy.
I like doing that though, and bed shopping too, laying on all of them. I kind of enjoy it. No, you're gonna get fancy ones with the speakers built in and the cup holders.
I mean, I shop for couches the way I trade, right? Like I make quick decisions. It's not always the best decision, but I make my decisions quick. And so it's like as soon as I sit on the one couch that I like, then I don't need to sit on any more. Like I'm sitting on one that I like, I'm good. Okay, I'm done. But we got to go look at 50 other couches.
Where do people even shop for a couch these days? Like you going to like Macy's or like Raymore and Flanagan? Actually, there's
Raymore and Flanagan.
Where up in
yeah, there is. My wife did want to go to a Macy's. We haven't gone to one yet, but there is one here. But they have they have places called like Furniture Row, and they have American Furniture Warehouse, and they have this place called Living Spaces, which I think is where we found a couch that we think we're going to settle on. There's a bunch of places.
See, yeah, you live in a real town. I got to buy my furniture at like Home Depot.
Oh yeah, I've been hearing about this Wayfair, Jason. My wife, is that like an online place? Like they send it to you in pieces and you put it together? Is that what that is?
I think it's better than IKEA. Is it the same thing? A lot of building with the Wayfair stuff? I've never dabbled.
Yeah.
All right, wait. Hey, I'm gonna go. I'm gonna go troubleshoot with Lundgren.
We're gonna talk about options. Go,
Sean. Boy, the show's in shambles today, huh? JC just takes the day off. Everything falls apart. My internet goes away. Dave Lundgren
everything's falling apart back here.
All right, go, Spencer.
We'll make this an impromptu.
I'll be back. I'll be back.
Maybe we make this like an impromptu flow show, Strazza. What do you think?
We should. Let's talk about options. So, what this week on the flow show? What we put on the Carvana? I feel like I keep talking about this, but the heavily shorted names are working. We came on, started the show talking about how meme coins, but also meme stocks, maybe ex GameStop today, have really been working. Meme stocks, heavily shorted stocks, it's the same basket of stocks, right? Like this space is a place where you could be getting long or longer right now. And I think that makes a lot of sense. ARK completing reversal, small caps completing reversal, the IPO index completing a reversal. All these speculative areas of the market, biotechs, maybe they finally get it done.
We hinted at this on Monday during the flow show that everything you're saying right now is true. And what maybe the bigger picture of what that reflects is that we are starting to get to the later stages of this bull run. That, I mean, we can argue about when the bull run started, but this current segment of the bull run really kicked off in beginning of November, right? Where we just it's like somebody turned the key and we just had liftoff. And I feel like we're at that stage now where we're starting to see all the craziest little things happen, all the shittiest meme coins and all that stuff rip. Speculative juices are really flowing. And sometimes, I mean, you could say, yes, this is signs of a top, but the top could be still many months off and we could go way further from here. We have to be positioning ourselves, I think it's irresponsible to not be positioning ourselves for the chance of a couple moonshots in some of these random places, because this is the time, this is the environment where it happens.
I agree. And
I'm not saying it's going to happen, but it could happen. Very well could happen.
And you're using like the sentiment, the feel that we're getting and some of these, this trash trade kind of working really well to say, okay, maybe this is late innings. But if you look at some of these patterns, some of these monster multi-year rounding bottoms, in, like I said, small caps, ARK stocks, IPO index, we keep going, biotechs. It looks like they're just kicking off brand new uptrends. Like the primary trend is just now reversing. So yes, we have sentiment saying, oh, things are getting a little frothy, but the technicals are still suggesting, Sean just was saying, participation really began broadening when we bottomed in October of last year and into November, December, and then more this year, especially recently. The charts are still saying we're maybe early middle.
All right, hold that thought. I got David Lundgren. We're bringing him on.
Yes.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
David, we got you. Can we hear you?
Good morning, gentlemen.
There he is.
Yeah. It's funny. There's no way I'm going to be able to figure out shitcoins. I can't even figure out my camera. So let me figure that out first, and then we'll get into trading crypto.
Did you hear what JC wanted us to ask you? He wanted us to ask you if you play with the toys. In other words, if you're.
Yeah, you have your answer. You have your answer. I haven't. He's 100% right. He's 100% right. We should all be doing it. I haven't had the time, and plus I just demonstrated that I couldn't figure out it if I had a full-fledged instruction.
How about some JC's attitude about being like a child and just trying all these new toys? I love it. The problem with me is that I'm just too cheap to throw money around on all these things that I'll probably never use.
Yeah, he's buying like the Oculus and then the Apple. David, how about AI though? Are you using any of these new AI tools in your process?
I do, yeah.
Really?
Yeah, I'm sure that I'm not using it anywhere near to the extent that others are, and probably even I could. But it's just an example. During 2022, during the bear market, I just went on and asked AI to give me a list of the 20 largest regional banks with the largest commercial real estate exposure, and boom, 2 seconds.
Which one? ChatGPT.
Wow.
Yeah. But I'm on FinChat all the time. I love Value Line. I haven't been a subscriber in a very long time, but I grew up on Value Line. But there's no reason to have Value Line anymore, unfortunately.
Yeah. We're big fans and users of FinChat ourselves.
Yes, it's amazing service. I forget what the section is called on the left, but it's the investors section, and they've got this list of 50 really top-notch investors, and you can click on each one of their names and get their holdings and what they're doing, and share investor letters for hedge funds. And it's just
shout
incredible.
out FinChat, the whole team over there, Stratosphere. We've had Braden on the show a couple times, and it's always great. People love it. He comes on. Because I never know. Like, we have to book time with him every now and then for him to show us all the cool new stuff because they're just building so fast.
Yeah.
I love it. And it can write too. Not saying we do that, but these AIs, they can write.
So if you ever read something from Strazza that you're just kind of like, you could do better, that's probably because he cheated and used ChatGPT.
You'll never know.
Hey,
You'll never know.
Hey, David, you were in Dubai, correct?
I was, yeah.
How was that?
It was amazing. I was in India the year before, because I had never been to Dubai before, so my expectations were kind of tilted by my experience in India, which was phenomenal, great experience. But it turned out, and I should have known this, but Dubai was a whole lot more like Singapore. Singapore is basically a brand new city that popped up on an island in the middle of nowhere, and Dubai is literally a city that's brand new. And I was in Italy last year as well, and just kind of walking along the streets in Italy, you walk by the Parthenon, and it's like you're never going to do that in Dubai because there is no history. So it's just you have to have the right expectations for what you're going into Dubai. And if you're not expecting this big, like India was an incredible cultural experience, whereas Dubai was just like the largest building in the world, the Museum of the Future. I mean, just amazing things, and the people were just spectacular, and the energy was just off the charts. So great experience, but it was just very different from probably what my mind was.
I know exactly what you mean. When Sean and I were in Singapore, it was almost strange how clean and modern it was. Like it felt like America, but newer.
Right.
Yeah.
Dubai is a big topic here in my house. I have a 9-year-old son, and he's really big into playing Minecraft. I don't know if you guys ever played Minecraft. I never did. I don't really understand it, but it's all about building, right? My son's building cities and towns and all this stuff. And so we've been talking about Dubai, and we've been watching videos online of the city because I told him, I said, hey, this city was nothing like 30 years ago. It was basically a big patch of sand. And so my son finds that fascinating. He's like, wow, and he's been taking inspiration from it and looking at the buildings and trying to recreate them in Minecraft. And so it's interesting. Yeah. Dubai is cool. Top of mind in our house.
That's really cool. Yeah. Yeah. The middle of the city where we were in, I'm trying to remember the name of it. It's the DIFC, I think it is. But it's essentially, it's like they basically conceptually like recreated the Vatican in the sense that it's its own country inside of Dubai.
Really?
So they have their own legal system. They have their own court system. police force and everything else, and it's a huge section of the city. It's probably, I don't know for sure, but I'm going to say it's like a mile by a mile square, and the reason they did that is because they're trying to attract all this global money into that region, and they just in order to accommodate that and sort of encourage it, they just immediately adopted what I believe is the British legal system, just to make the transition that much easier.
In a sense, what they're trying to do, forgive me if this sounds ignorant, but it sounds like in Dubai, they're really trying to recreate the best of all parts of the world, like the best government, the best architecture, the best social structures, what their perception of the best is. They're trying to take all those pieces and meld it into one, for lack of a better term, utopia. Is that the vibe that you get of Dubai?
Yeah. I mean, I wouldn't deny that, but what I just got was again, this is not a bad thing because it was amazing. Just like going to Singapore was amazing. I mean, Spence, you were in Singapore?
No, the other two guys were. Okay.
So you remember the building with the big cruise ship on top? I mean, that's just crazy. Did you go to the top of that building?
No.
So I went up, and there's literally a swimming pool. It's just like a cruise ship. There's a swimming pool up there, right in the middle of the quote unquote cruise ship. So that's kind of the vibe I got from Dubai. So it's just kind of cool, innovative, brand new, super high energy, and just great people. The food was incredible.
When you met investors and traders out there, I mean, I know there were people coming in from all over the world, but I'm sure you met locals who live in Dubai. Did you get any kind of sense of what investors in Dubai, what their attitudes are about risk and how they think about investing?
Well, there's huge consumers of technical analysis, huge. And the residents in the city were 10% locals, 90% expats, which is also very similar. I don't know if that's exactly the right ratio in Singapore, but it's the same idea in that they're explicitly trying to bring in external money. I'll probably be heading back down in May, both to discuss opening an office there and hiring somebody there to both sell the research as well as the fund that we run. So they have a big hedge conference in May, so I'll probably head back down for that.
That's awesome.
Very nice.
All right. Let's talk markets. You sent over a few charts. I want to look at this who's who of cyclicality table that you sent us. There we go.
Yeah.
Yeah.
I mean, it's the more cycles you go through, the more, if you're just being as honest with yourself as you can possibly be, and also therefore I'll put it on the table and just tell you how I feel during moments like this with all this uncertainty in the election and inflation. And there's a chart in here on inflation that we should probably talk about, and all the geopolitical stuff. It's just like, in the market inflex trend, it's like, man, this doesn't make any sense to me. And what I find when you actually just kind of like quiet your mind and listen to the market, the truth of the matter is the market knows things you don't know. And you have in your mind what you think you know and what you think is important. And when the market's doing something different from that, it pays to go with what the market's thinking or seeing, because 6 months from now, it'll make sense. That's just the nature of trend change. So one of the things I like to look at is, in these moments, what is the rank sort of sector leadership? And if you knew nothing about what was happening today, and you were just given your free shot at ranking the sectors that you would like to see leading in a bull market, I mean, this is it. It's industrials, financials, discretionary, tech, energy, materials. And the only thing you can say about it is it's rotational. So it's not necessarily consistent, but it's rotational within cyclicals. And it's been like that for over a year. I mean, I think I've been on with you guys. Thanks for having me on again, by the way. I don't know, this is maybe my third time on, and this rank sort has been the same in terms of being cyclical the whole time. And I think a lot of people would be surprised to see that technology is only number 4.
Oh.
And when you look at, you guys know how I am. I'm more of a sort of like a longer term trend follower. So I track really long-term trends, and just barely more than half of the tech sector is in an uptrend.
Right.
That surprises a lot of people.
Because breadth is not so great as you move down the cap scale in tech. Is that why your scores are showing that? Is this like the S&P 1500 or just the S&P 500?
This is 2,700 stocks.
Everything. So do you think it's because if you look at something like industrials or materials, down the cap scale just looks far better than something like technology? Technology,
I think you're spot on. If you look at industrials, so the momentum score is an average of the 3 scores to the left. So short term, medium term, and long term. Because the way momentum works is that it's very mean reversionary in the short term. So like if you're looking at 1 month momentum, it's mean reverting. And if you're looking at 3-year momentum, that's mean reverting. So the sweet spot is somewhere between 3 months and 12 months. And because they all work and they all signal differently, rather than just following one, I take an average. And I think that's very similar to what William O'Neill does as well. Sense. In industrials, I think I actually showed the chart on this maybe the last time I was on it the time before, but I have another chart very similar that industrials have been outperforming, equally weighted, have been outperforming since the bear market started in early 2022.
What do you do with something like, say, you're a long-term trend follower? Looking at the second table on the right-hand side, what do you do with something like nuclear or coal or refining here, where the longer-term trends, even the medium-term trends, so strong, are really pretty weak over the short term?
So you prefaced it perfectly, because and you can see that showing up here with a short-term rank on. It's not bad. It's just dropped, right? It's not as strong as it has been. But for me, where I'm trying to capture, hopefully, multi-year trends that can double and triple and 5-bag and that kind of thing. These are just pullbacks that are an inevitable part of that process. And so what I really focus on, almost exclusively, is defining the environment that we're in, so that when the correction happens, I know what to do about it. So rather than think, what I try to do is I try not to think 2 years out, because I actually have clients who are like, is the market going to be up a year from now? Because if it's not going to be up a year from now, I'm not going to change my exposure. And because it could not only be up a year from now, but it could be up 3 years from now. I have no idea. So what I try to encourage people to do is to just take the 5% corrections one at a time. And if we're in a bull market 1 year out and we've managed 2 5% corrections, we still caught the 1 year run without forecasting it. But we, more importantly, managed what we can manage is which is what's happening right now. So when I look at this, and I don't think I included the other charts, but there's a whole array of models that I have that assess the quality in the technical structure of the market. And I think you guys probably see, I'm sure you guys see it all, but there's divergences all over the place. Momentum, breadth, like technology sector hasn't broken out this month, whereas the S&P has. That's kind of interesting. So all of that says that, with the S&P up in a straight line since October, we should get a correction. So if we get a correction, I'm a buyer of it. And the only thing I would say is I don't have any short exposure on right now, because I don't short in a bull market. But if there are people out there who want to short, the only thing I would say is, if you really feel that inclined to short because of these divergences, and like I said, the XLK hasn't hit a new high this month, which is leadership diverging. We have a lot of reason to think that we can, but I would just say that if you're thinking of doing it, don't do it when the market's down 5%. When you get more courage to short, right? Because when the market's down 5%, you're going to want to be buying it. So if you're going to short, do it now. And obviously that's dicey in and of itself, which is why I'm not shorting. But the idea is that if you feel you must short, maybe even you have a mandate where you have to short, I would be doing it now, not down 5%, because you're going to want to be buying.
So David, when you're looking, you said you don't like the short stocks in a bull market. I get that. Now, when you're in a situation like this where the S&P's been in this straight line, and you might be thinking that, hey, we might be due for a rollover, and maybe you get that itch to maybe put a short trade on. Are you looking to short stocks that appear to be overextended, or are you looking to short stocks that have already kind of declared that they're weak and they're weaker than the rest and their relative strength is low, and you're going to jump on that wave? Do you have a preference? Which way do you lean?
Yeah. So let's say that I had to have a short book, because let's say the hedge fund had to have short exposure. It happens that, like the way I set it up, I don't have to, so that's on purpose. But let's say I had to. My default short exposure, like let's say I had to keep like a 30% short exposure on at all times. My default short exposure would be just to be stuff that's like, if you go back to that sector rank table, it'd be the sectors in the bottom half of the rank. And that's just where I would be. And I would just kind of like coast with that short position and just don't think about it too much. And if I've been short the XLP or the XLU and that's all I've done, that's been a great source of funds. And so that's how I would do it. Now, I'm not like there are times when it looks like we're still in a bull market when in fact we're not. So that was to the end of 2000, really the beginning of 2021 into the end of it at 2021, it just got worse and worse. In that window, you could actually find, all this work was deteriorating in the, I'm sorry I didn't include it, I probably should have, but the other models that I have were already showing bear market into the latter part of 21. So it looked like I might have been shorting a bull market, but I wasn't. It was shorting the beginning of a bear market.
Do you tend to see the rank, put the table back real quick, Spencer. So the sector rank table, does that tend to invert once we're moving into a bear market? In other words, staples, utilities move to the top?
100%. And they do it before the bear market starts. Like visually, like when we can all look at it and collectively say, yeah, that's a bear market. In that moment that the bear market actually started 3 to 6 or 9 months beforehand. Like the GFC actually started in 2007.
Right.
So you heard it here, folks. Don't short stocks in bull markets. I want to talk about.
Yeah, you could. This is not the first time you've heard that, I can assure you. I just happen to listen.
Listening. Anyway, David, I'm glad to hear you say that you would rather look for weakness, because I feel like there's a tendency for traders when we're in an extended bull market like this, and there's always going to be that segment of the trading population that missed the bull run, right? They're sitting on their hands watching a stock like NVIDIA double and triple. And because they missed that stock, they feel like their way of getting back at it is to short that thing and ride it all the way back down. And I feel like it's
great point.
It's an easy trap to fall into. And I feel like, I'm guilty of it from time to time, certainly, but I feel like too many people fall into that trap.
Yeah. And I think the other one too is picking the same stock is that they'll look at what it's done over the past, say, 5 years, and they'll get this feeling like it's an emotional release with it, where if they buy it today, it's almost if they're capturing what's already happened.
Yeah.
When in fact, what they're buying today is 38 times sales, not 2 times sales when it started. Right. But when we engage with a trend that looks great like that, and it's done really well over the past 5 years, it's almost like we get this behavioral response that we caught that. When in fact, it's on the books, it's in the rearview mirror. And what you're buying now is a stock that's trading at 38 times sales. And we can go on and on. Like I wrote a note to clients a week or so ago about comparing NVIDIA today to Cisco back in 99. And Cisco went to 30 some odd times sales. It was the stock, like the conversation that we're having right now over video would not have happened if it wasn't for Cisco. And that I think you had to be there and go through it to appreciate how irrelevant that sentiment is in reality. Because to sit here today and say, well, how is NVIDIA not going to go up 500% from here? AI doesn't happen without NVIDIA. So unless you've actually gone through it once, at least once, it's really hard to see that any other way than like, how is NVIDIA not going to triple from here? But you go back to 99. I was at Fidelity at the time, and I wrote a note saying that when Cisco peaks, everything else will bottom. And so Cisco topped, and when Cisco topped, it was trading at 38 odd times sales. It was the picks and shovels stock of the day. It was like, the internet doesn't happen without this company. And guess what? Over the next 10 years, Cisco and other companies built out the internet.
Kept moving lower.
It happened. Everything that was in that 38 times sales, all that hope and promise happened, but the stock still went down 90%. And it started its descent on its way to down 90% as sales continued to go up.
In 60%. These hype cycles, it's not that it's not real. It's that these stocks are going to pull forward, like you said, a decade of gains.
It's all optimism. Exactly right. Say people reach out into the future. Like bubbles are generally right. Yeah. They just get over exuberant. So and this is just capital cycles from the beginning of time. I mean, this is how great inventions happen. There's a reason most bubbles around technology, because it's and it excites people, and people reach into the future, pull it all to the present, and then throw 38 times sales on it.
So what you're saying, are you almost, I know you're not predicting anything, but you're preparing yourself for an environment where maybe these early leaders, the AI stocks as we know them, peak, at least on a relative basis, maybe on absolute terms, but the rest of the market keeps working. We have small caps, these speculative growth stocks just now breaking out, IPO index, ARC, maybe biotechs, maybe banks.
Yeah. Yeah.
Something like that.
Yeah. Yeah, exactly. And I think, gosh, these are charts I should have just included, but the when you look at the peak heading into the 2000 peak, as we know, it was very narrow. It was basically the quote unquote AI stocks of the day back then, but Amazon and Cisco and Sun Micro and Dell and all these other companies. When that was going on, the percentage of stocks above the 200-day average was plummeting. The day that Cisco peaked, right, the percentage of stocks below above the 200-day average bottomed. And as the S&P declined and fell almost 50%, the percentage of stocks above the 200-day average rose for a year, indicating that we basically went from a stealth bear market to a stealth bull market. And that persisted until the recession hit in 2001. And then, of course, 9/11.
Are we seeing early signs of this kind of happening already with the relative trend in tech moving lower most of this year?
It's very possible. I actually have a chart in here that I did manage to include. It's the geometric average.
Yeah. So 4.
Yeah. So this shows you, like, I think I get pushback on this chart every time I bring it from JC, but I want to just stress that I'm not saying that this is a representation of wealth creation in the country. It's not. The best way to measure wealth creation from equities in any country is cap weighted.
Yep. Like,
there's a lot of faults with cap weighting, but this tells you how much wealth was created. This does not.
Would you say that most people's portfolio look like a cap weighted average, like the S&P 500, right? That's what you're talking about.
I wish that were true, because that would mean that most people do well.
Okay.
Yeah, but no, I wouldn't make it any more complicated or any more detailed than it's a simple statement that cap weighted indices represent how much wealth was accumulated or destroyed. Like it or not, if all this money that comes in every month from 401ks continues to pile into index funds, then the bulk of those assets are going to go into the Mag 7. Right. And that's either going to accumulate or destroy wealth going forward. But this index, even though it's 1,700 companies, they're equally weighted. So this is not showing you wealth creation, but it is showing you participation in the trend. And so we now know, of course, that the S&P is out to new highs, and this thing hasn't even broken out of its base yet. So from this perspective, the bull market hasn't even started yet.
I usually just say this one's important because most stocks look like this. Is that fair?
Yeah.
Russell 2000 kind of works as well. There's a lot of equal weight indexes out there, like the Vanguard Extended Market, equal weight Russell 1000. Anything that's just now completing a reversal pattern, I think, is what most stocks are doing, right?
Yeah. And the thing is that when you have a robust bull market that lasts for a full cycle, 2-3 years, these two lines move together. The XVG, which is the on stock charts, is XVG is a symbol. When you have a robust bull market, the geometric average in the S&P move together. It's like the car and the fuel tank, and it's a full tank as represented by breadth, and the car looks great. So that's what a clear robust bull market is, and clearly we don't have that. And so when you have these discrepancies, there's a message embedded in there. We have to figure it out, but rather than forecast, because I could easily sit here and tell you right now that, look, the peak in 22 is still what it's probably 15% down from that peak, and we know the S&P is out to new highs. I could easily spin this right now and tell you that this is a massive divergence. And when this whole thing starts to roll over, it's going to fall apart like nobody's business. I could easily give you that scenario, easily, and I'm actually open to it. But rather than forecast like that, just try to follow the market 5% correction at a time. And right now, the data is good and getting better, nowhere near extreme. And if we're going to have a bear market, the data is going to be bad and getting worse. And it's not going to just suddenly happen. Even COVID, although that feels, certainly of all the things I've ever navigated in my life, that crazy, more than any other market environment, felt like it came out of nowhere. but in many ways it didn't. And so you had enough data to really respond when it really started getting going. So just be patient and take it 1-5% at a time.
The way I learned it is that in bull markets, the laggards catch up to the leaders.
Yeah. Yeah. And you don't necessarily want to buy them either.
Right.
You know?
You know, it's funny you mentioned Cisco today, Valdez. I saw the stat this morning from the WSJ that on this day in 2000, Cisco became the most valuable company in the world for however brief moment it was there.
Yeah.
So,
and
Microsoft is the largest company in the world today. I think at the peak, Microsoft was the largest company at the very end of that move. It was $606 billion or something. I don't know how big Cisco got, but they were basically like Apple and Microsoft are today in a knife fight to be the largest. But the point is that after becoming the largest company in the world, with all that promise of the future of the internet and everything else, Microsoft fully participated in that 2003 bear market. Then we had the 03 to 08 bull market, and then we went down into the 09 bottom. Of all those mega cap companies from 2000, Microsoft actually went to new lows below the 2003 bottom. So we love Microsoft today, but this is actually, and we loved it at the peak in 2000, but just this is what can happen. No matter how much you love a company, how great the fundamentals were at the peak, that doesn't mean anything about the future.
I think what Microsoft has pulled off is rare too. I think what happened to Cisco is more normal.
Yeah. Another example would be that's more along the lines of what Microsoft did, but actually only better in many ways, is Amazon. You know, Amazon peaked in 2000 when Jeffrey Bezos was named Man of the Year.
Down 90-something.
And the caption of the magazine was how Amazon is going to change the way the world shops. Right. Nobody would deny,
and they did.
It did that. Yeah. It 100% did that, in a whole bunch more, right? And it was 55 times sales when it peaked. And so it went on to deliver all that was promised in that 55 times sales, but the stock still went down 90%. And as it was on its decline of 90%, you know what sales did?
Doubled.
In the same exact window of time. They tripled.
Do we look back in 10, 20 years and say, wow, it's so obvious that NVIDIA was going to be the largest company in the future?
That's beyond my 5% of the time scope.
Yeah. I think David was just saying the opposite of that, right?
You know, I read another article about antitrust in the paper like every day past few weeks, and Microsoft's not named in them. And that's just so amazing how they pulled that off.
Yeah, it's much loved.
Yeah. All right, David, thanks for coming on, man. I appreciate you powering through the technical difficulties, but thanks for coming on. Thanks for hanging out, and always a pleasure, sir.
Yeah, my bad about the camera. Great to be on, and good to see you guys.
Thanks, have a good one.
Talk to you later.
There's a lot there. There's a lot.
I feel bad, right? When these guys send us charts and I don't ask them about them, but the conversation is just too good. So, oh well.
Yeah, no, but the comment about shorting too, it was a very interesting takeaway. But I don't know if there's the right answer, right? Like it's hard to short now.
Everyone's different. Are you aware of my philosophy on shorting?
What?
I don't do it.
Don't do it in a bull market, or
I gave it up years ago. And David Lundgren is a large reason why I did that.
Strazza, hearing you say that, like I feel like I'm kind of leaning the same way. And I wonder if these are the kinds of things that we're going to look back 5 years from now and say, what the heck was wrong with us? We were so polluted by bull market thinking.
But I did it. This will be my second cycle. I've taken 2 bears off now, and I'm liking it. And David Lundgren had a huge impact on me, just talking to him over drinks over the years of not shorting. He also, and we'll have this conversation with him next time he's on. Like you said, he's on all the time. He talks about how shorting is different than going long, and how you behave differently in a bear market than a bull market. A lot of people think you can just take your bull market strategy, right, and process, flip it on its head, apply it to the bear market. I'm good. You can't. It's different. And I was never able to figure it out the way that I feel like I figured out participating in bull markets. So forget about it. I'm not good at it.
Let's not pretend it's been bull uninterrupted. Like we just had an epic bear market. Granted, in hindsight,
Yeah.
it feels like it was really short, right?
Like so much
it was
golf.
only what?
Yeah.
12 months and more? I don't know.
It was
15?
longer because it really began in 2021.
Yeah, all right. 16?
2021 was a terrible year for me. Getting chopped up, finally quit like halfway through. And I didn't get back into it until about a year later. So 12 months, doing very little.
Played a lot of golf
here and there. I don't know. I think it's a nice life too.
Certainly.
Sean's making a face.
It's like the market giving you vacation time.
Yeah, you earn it. You got to earn it though. All right. Yeah. News? Are we done with news? Because these gold miners, man, they're moving. I actually want to talk about
there was a couple other things. Just I wanted to mention quickly. We talked about the GameStop, which is down. Earnings were light. Be expected. We talked about Robinhood. Goose doing some layoffs. 17% of their workforce getting laid off. We have some more M&A in healthcare, pharma land. What?
Canadian Goose?
Yeah, Canada Goose.
People still wear those?
Sorry? No. Johnson & Johnson in talks to acquire Shockwave Medical, SWAV. That was from the Journal yesterday. Shockwave went up on that. And then, this is interesting. Visa and MasterCard agreed to lower their swipe fees. This goes back to a lawsuit that goes back to 2005. A class action suit brought against Visa, MasterCard, and the other major credit card or banks that offer credit cards about their swipe fees. So they finally settled that almost 20 years later. And the bottom line is they're lowering their swipe fees a little bit. So, but that was interesting.
Did you guys see that viral post that was going around recently, maybe a month or two ago, about how consumers using credit cards and paying these swipe fees are what's killing small businesses in America? Did you guys see that?
Nope.
Why? You don't believe it?
No, I don't disagree with it. I'm not gonna do the post justice, but they were talking about how all these swipe fees come out of the pockets of small business owners. It's a big reason why small business owners are struggling. And they were trying to get everybody, you should go back to cash. Cash is so much better for the economy. But
no,
yes,
never.
There are parts of that that are true. But the point is, for the rest of us who use credit cards and are responsible with our money, it's irresponsible for us not to use a credit card because of the additional benefits we get from it.
And therein lies the rub. Yep.
And you're not getting any discount for paying cash, right? Now, if the company offered a discount for paying cash, then maybe it's a more valid argument. But if I'm paying the same price with cash versus credit card, and I'm getting benefits from using my credit card, I'd be stupid not to use it.
Yeah, capitalism. There's really no good solution for this. It is real. A lot of these small business, the restaurants around here, they get absolutely gouged by the delivery companies too. Will try to deliver on their own, but nobody wants that either at this point. So it's tough. They got to figure it out. The fees from Square and Stripe and all these different things that they use, it's burdensome for sure.
I heard the blockchain.
I'm tempted to say that the blockchain fixes this, but I don't know.
Yeah, when? When?
Never. In theory, it does. In theory, it fixes everything, but when? Never. God only knows. I don't know. Let's just do a quick rundown.
And then Merck. You forgot Merck. WinRevere?
I don't think I saw Merck. What's up with Merck?
Merck, 5%, baby. Let's go.
Oh, what the heck happened there?
Lung something? Lung drug? Or lungs?
Oh, yes. I did see that this morning.
Lungs?
Okay. Lots of green on the screen. Major indexes all up. Anything jump out to you guys? Oil's down. No.
You try and do a little rundown here?
I'm just staring at my screen and I'm looking at it.
You see the Robinhood? Robinhood, another big gap.
Yeah. Robinhood is too good. We talked about it before. I tried to say nice things. The chart looks fantastic. Nothing but green on the screen on a sector level right now. So you got real estate leading it today with utility. So it's a defensive trade or defensive tape, at least in the first 15 minutes of trading here. Then communications, industrials, energy, just about flat, slightly positive. Then tech a little bit higher, consumer cyclicals. In terms of industry groups, what's leading the way here? Office REITs, that's rare.
Hey, SLG, baby. That thing's starting to,
Silver.
well, it had a little pullback this week, but it's off to a good start for us.
Oh,
The SLG, that's New York City, our New York City long.
Yep.
And silver, precious metals continue to stand out. Silver is the biggest gainer on an industry level today, more than 3%.
when is the last time real estate was the best performing sector for a given period of time? I don't know, day? A day. Let's start with a day.
Q4, right? Real estate was a big mover off of the October lows with that interest rate sensitivity trade. And then
I believe you. Yeah.
No, it was. And then it cooled
I
off.
believe you.
You know, this year it's been like biotech or the banks, regional banks at least, where big gains in Q4 and just sideways since. Market looks good, is I guess the point. We don't have any economic data, no Powell on this fine Wednesday afternoon.
Nothing.
Okay. And we have a short week, right?
We do.
Short week.
We do. All right, let's bring on Mary, see what she's trading.
Mary's trading Robinhood.
I wouldn't doubt it. I wouldn't doubt it.
Good morning, gentlemen.
Hey,
What up?
Mary.
Hey, good to see you, Sean.
Good to see you. You and I are never on the show at the same time. This is great.
Never. This is fun. Yeah.
You're like a breath of fresh air.
Oh, you're sweet. Thank you. What was that, Spencer?
The world's colliding.
Yeah.
Yeah. All right. What?
Yeah. So how about that Robinhood, huh?
Yeah.
Are you in it? Are you riding it?
Oh, there's a long history with me and Robinhood, and Steve giving me all kinds of shit
You know,
for that trade.
Steve gets the rap for being the chief YOLO officer, but I don't know. I think
He missed this one. Well,
Mary's got him.
you gave me a lot of shit for this one. Not as much shit as Tilray, but the Robinhood has ended up being a good winner. I still have a position on. I took some off when I said I would, which was at that VWAP. What was it? The swing, the high, I think. But yeah, I've got still half the position on and feeling happy this morning.
Robinhood looks great.
About Mary, you know what I like about Mary Strazza is that Mary, like I feel like Strazza, you and I were like old jaded traders, and Mary's like she's like youthful and excited about it. Like she has so much fun
newbie.
with it.
Right.
She's doing it right. We're doing it wrong.
Well, hopefully Vlad Tenev does more interviews for you, Mary.
Hey, I know what I'm in. I know what I'm trading. And I said that from the get-go. I know what I'm trading with this one. That's why I took half off the table when I said I would.
No, it's
now it's just letting it ride just because that base was so nice. I mean, yeah. One for the good guys.
It's the same pattern we've been buying. Yesterday, Mary was saying to me offline, I don't know how you guys come up with your ideas, like the process to get there, right, to our longs and stocks that we want to buy. Mary, I think you're doing okay because it happens over and over and over again where I'm looking at a stock and Sean likes a stock and the analyst team likes a stock, and then you're sharing the chart or you're coming on here talking about trading it. So whatever we're doing separately, oftentimes we're getting to the same endpoint, no?
Yeah, so funny thing, because this happened exactly just yesterday. So I'm in the process of typing to Steve on Slack, hey, would you check out Square? It's got, what did I say? I think the 50, I think is starting to curve up the moving average, and we got a nice base. And so I was like, what do you think? I'm hitting send the exact second he's posting into the research Slack, hey guys, Square is looking about ready. And I'm like, oh my gosh, we are literally thinking the same thing at the exact same time. So what are the odds?
So what it really comes down to is, I think all of us here at All Star Charts, we like big bases and we cannot lie.
Cannot lie.
And this is one of them. Robinhood, you were getting long, looked a lot like this.
Looked a lot like this. Exactly. Yeah. So these have been my favorite patterns to trade lately, just because they're kind of the laggards of this bull market. They're still finishing this base, and, fingers crossed, once they finish this base, they take off like Robinhood and make me a lot of money.
And if you drop a VWAP at those old all-time highs, right? Mary's talking about catching the trend reversal fresh, just as it's happening. right? I think 90 in this one
Yep.
gets you there. If
Exactly.
you want to jump it, you have a little coil right here at the upper bounds textbook, 88, 90 for confirmation.
Yep.
We know then, and look at the 200-day, maybe needs a little bit more time, but it's curling higher. We love to see that. Relative trend could use some work, but Robinhood, we could have said the same thing about, and that trade's worked beautifully, and now the relative trend has reversed, right? So sometimes it just needs time to catch up. It's similar to momentum in that way. Sometimes the confirmation doesn't happen, perfectly on the day of the breakout. That could be okay, particularly in bull markets. We could bend the rules a little bit, right? Take on a little bit more risk, jump in entry. So square above 90, I really like it. Maybe we put some calls on this one. I don't know.
Can you guys hear me? Yeah. Okay.
Yeah.
Just checking because my mixer just crashed. We were just talking about how this company is bad for the American business.
Yeah, it's bad. It's terrible. Let's buy it.
Let's buy it.
Honestly, I don't care what it does. If the chart looks good, I'm buying it. And that's right. I think my the newbie strategy of coming into the markets fairly recently. I don't know what a lot of these companies do, and I just let price kind of
for the better. Sometimes when you know
gouging mom and pop, let's buy this stock.
Sometimes people who know too much, they can talk themselves out of things.
Exactly. Yep. So, watching gold, which I know you guys mentioned. I'm in a couple of gold miners, which have been performing really nicely. I know we've talked about AGI here on the show a couple of times.
Yeah.
I'm in a smaller one that I can't mention on the air, but that one's doing really well. And so precious metals still looking pretty fresh. What's that?
Are you long this AGI?
I am. Yep.
It's up big today.
Yeah, it is up big today. Yeah, my account's looking real green today. And side note, MSTR hit 19.99 and 99 cents of all things. 2000 was my sell order for part of my Let It Ride shares.
That's not an accident.
I know. I probably should have put it at 19.99, but yeah, so I'm still riding that one too. I mean, what a fantastic trade that one has been. And we were on that one really early internally and with our members. What a fantastic trade. So that's probably my best trade to date this year, the MSTR. Yeah.
And this question is for both of you. Have you guys been able to control yourselves, or are you buying calls in Tilray and these pot stocks yet?
Oh, I brought the Tilray chart too, just so you could yell at me.
Put it up. I'm looking at it right now.
She's worse than me. She's worse than.
Listen, I could get some action on this.
Yeah. So this one, okay. So 250 really is the level. It's had a hard time here the last couple of months trying to clear 250. Mm-hmm. And so I got involved as it was clearing that VWAP from what is that, September, I think. Yes. And so I started my little position. I know what I'm trading. It's a piece of shit, right? And it is what it is. But if we get and close over that 250, I'll probably be adding to my position. And, again, the laggards, the beaten down guys, if the memes are running and all the other things are running, I'd say, why the heck not Tilray 2 or the pot stocks?
This thing could be at 3.25, right? Those September highs in no time.
Exactly. Real quick.
This is one you probably just want to trade the common on. It's $2 stock anyway. Right. Plenty of juice there.
Stock is a call option.
I'm okay with this now.
You're on board?
Stay with me.
Nice.
These stocks are working. It's an environment thing, right? We'll come on here. We're talking about the heavily shorted stocks. I feel like a broken record. This is the third time I'm saying this today. The most shorted stocks, they're mooning. The meme stocks, they're really working. Junky tech, speculative growth, right? It's working. Same thing. So.
Why not pot? Yep, exactly. Yeah, and so I've also been training the Carvana and a lot of the other names on our freshly squeezed list. I mean, you guys put out so many great trade ideas. Every day I'm opening up Rangefinder and seeing what's in, right at that entry, right in that beginning range. And I'm having fun. It's a fun market to trade right now. And Mama's making money, so I'm happy.
It's a bull market when you're like, I mean, which one do I buy?
Right.
We have all these ideas. Can't buy all of them.
Can't buy all of
them. Mary mentioned our internal Slack channel. We also have a weekly team meeting. If you want access to these things, you have to call Mary. Frankly, is the only way to do that. So I'm going to throw a number up on the screen. If you want access to any. Mary is like the consumer in chief of all of our trade ideas and all the content that Steve and his team put out. So if you have any questions about anything that they're doing, he's the person to talk to. The number's on the screen. You can also email her. I'll put the email up on there. It's just Mary at All Star Charts or Mary at stockmarketmedia.com. And yeah, good stuff. She spends all her days trading meme stocks and talking to our members. So
it's a great job. It's a great life. Love what I do.
Yep. All right, let's do some recess and then get out of here.
All right, let's go.
All right, I guess
just you and me, Spencer.
Okay. Yeah, I don't know. But yesterday on the show, we were talking, of course, about the horrible accident in Baltimore and the bridge, and I had a few more conversations up with people during the day, and it inspired me. And so last night, and we were talking about The Wire also yesterday on the show and in the chat. So it inspired me. So last night, the wife and I, we had a conversation, and we came to an agreement. We are going to watch The Wire. It's going to be a rewatch for me, a first watch for her. But we're going to commit to The Wire here in the next probably week or so. And it's going to be a great journey, and I'm very excited. It's been a long time since I've seen that show. It is one of the best shows ever made. And
what is the show about?
Oh my God.
It is about.
I have kids.
It's okay. It's about the kind of the war on drugs. It's about the police and the gangsters in Baltimore and how they work with and against each other at the same time. And it's about their relationship, and it's about the hamster wheel of institutions and how life never really changes at all.
It's about everything. It's very Sopranos-esque. It's probably my favorite show ever, where it's just about people.
Okay.
It's about people.
Where do I find said show?
HBO.
Netflix,
it's
Amazon?
An HBO show.
Oh, okay.
HBO, where you can find all of the best shows. I'm so happy for you, Spencer. That's awesome.
I had to tell her, I was like, look, I've never steered you wrong before with the show. This show is a bit of a heavy lift at the beginning. But you'll have me there with you to walk you through, because there's like 500 characters, but it is a great show, and I'm very excited for me and very excited for her as well to experience it for the first time. So I'm excited.
The best characters in the history of television on that show, Omar, Stringer Bell. I mean, it's so good.
I mean, Bubbles, man. It's just Bubbles. That's it. Anyway, that's my recess. I'm excited to. We'll probably start this weekend, and then we'll see how it goes. But I'm excited for her. So anyway, that's my recess. Mary, you sent over a picture. What is this?
Okay, so tonight my kids have Pinewood Derby, and so they created these little derby cars that they then race down a metal track, and you're going for speed to win. Well, this is just difference between my middle child, who's a boy, and then my youngest, who is a girl. So it's just so funny because, the middle child is all about the speed and all about the aerodynamics. And I don't know what's with the holes in the front of the car. That seems like that's going to be a problem. But maybe he has some sort of idea that he's still going to do here after school. But then my daughter has her Pinewood Derby car that's a unicorn. And we've got the horn and the rainbow hair flowing off the back and glitter. It was just so funny to watch these two kids put these two cars together, so completely different and so not like speed versus how does it look. And it was just so funny. I had to share it with you guys.
Wait, what is this for?
It's called the Pinewood Derby. It's at youth group, and so they put these cars down a metal track, and it's just racing of cars.
This is bringing me back. I used to do.
Did you used to do this? Okay.
I remember doing this with my dad as a kid.
Okay.
So for the Michael Jordan car, first of all, it should be tar heel blue, a little bit lighter. And you got to take some ball bearings and plug them in those holes, because it's not going to be aerodynamic with holes.
Right? I know. I don't know what that's about. I'm thinking maybe he's going to put lights or something on there. I don't know.
Oh, that's so fun.
Wow.
Yep. So we got the Derby tonight, and I think my daughter's going for best in show, not for speed. Because that's going to be the slowest car on the track.
What does 23 represent?
It's his favorite number. No, I don't know.
Michael Jordan. Yeah, makes sense.
Michael Jordan.
It's not he's more of a football fan, but.
Oh, all right.
Michael Jordan.
That's cool.
These recesses were too good. I can't compete with them.
All right. All right. That'll be it for us here today. We got analyst meeting in an hour. We got the hot corner with Steve right here on the channel, 1 o'clock Eastern time. See you guys there. Go make some money. Thanks for hanging out.
Hope the waffles were good, JC.
I hope so too.
Missed you.
Reese. Yeah.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then I go